use. And then John, you asked about, like what's the mega trend, if you will, that I'm referring to. If you look at like a chart of SPY, for example, or SPX, and you just zoom it out over long periods of time, what you're going to see is that the trend is generally up and to the right. So the long-term trend of these major indexes is what we're looking at. So not how did it do this month, this quarter, this year. We're looking at years and years of time. The overall trend is up. Now, of course, there's, waves up and down on the way, but the long-term trend is up. So when I refer to the long-term trend of the market, that's what I'm talking about. And, you can pull that up on any charting package. You could look at weekly bars or monthly bars, look at SPY or a lot of the major indexes. That's the direction that they're going.
Did you ever consider, let's say you're using annual bars or monthly bars going back, let's say having like a 500 period moving average, and that would officially declare that this, I don't know, 80, 100 years uptrend was now neutral or something? Is there some type of lens that you created just to have that kind of context?
Yeah, that's a great question too, John. No, I haven't done that. I tend to think of market filters with moving averages on a more of a tactical time frame, in the sense that, yes, I am interested if there's like a huge seismic shift, so, instead of the market going up for the next 50 years, it's going to go down for the next 50 years. But I also know from doing research that having a shorter kind of tactical way of looking at things, like how we're looking at an 8-month moving average, or some systems I use like a 200-day moving average, that gives us an ability to capture bull runs that happen in bear markets. So like, for example, if we think about the Great Depression, if you zoom out on the charts of the 1930s, there was some huge runs up. Of course, there were some huge runs down. But if the market's going to go down for the next, if a mega cycle of decades, the market's going to go down, it's going to go up at some point in there, just like it's been going down as it's been going up. So for me, I prefer to use a bit more of a tactical time frame so I can catch those uptrends, even if we get into a mega trend of decades where the market's going down. And it's quite possible that could happen.
Awesome. Great. Thank you.
Yeah, you're welcome. Thank you, John. It's a very intelligent question. Thanks for